There's so many things that can go wrong. I've seen so many people buy because they have the money, like the deals we just bought. They had the money. It was a group of doctors. They had the money. They buy this big deal, but they don't know what to do with it after. So you really got to know your stuff, not just because you got the money to throw at it, because you don't want to come out, on the losing end of something like that. So you have to get educated.
All right, ladies and gentlemen, it's Aaron Fragnito, your host of the Passive Cash Flow Podcast. We're back here with another episode. We have a guest named Edna Keep. Say hello, Edna.
Hi, guys. How are you?
Doing great. Edna, I'm really glad we have you on the show here. You seem like a ball of energy, and your stats, the numbers you're putting on the board are really impressive as an investor. So what do you do, Edna?
Well, primarily nowadays, I coach and train people to do what we do, but we also are still active in the game. We still buy real estate. We own primarily multifamily, although we did start out in the single family space like most people do. We have 778 doors and always looking, mostly in Canada, but our last 260 doors were in the US, in Memphis, actually. And my passion is just helping other people get in the game. We've done well, and we're in our give back phase of our life.
Good. I love that. I love that so much. It's nothing like being able to give back, and that's really the best feeling in the world. That's why we do this, after all. That's why we try to build our wealth at the end of the day, right?
It is. And, sometimes people will ask, and I think you probably get the same thing. Well, why, if you're doing so well, why do you want to stop and train other people? I think it's a natural progression. You just kind of want to share what you learned and some of the hardships you went through too, to help other people avoid some of that stuff.
Oh, yeah, absolutely. Plus, after a while, 770 units, you kind of want a little change of pace from your daily.
Exactly.
I'm up to about 120, and there's certain days I'm like, boy, real estate investing is a lot of work. You really got to be committed every single day, a lot of long hours. So absolutely. But so anyway, someone listening is going to say 770 units. I own a 2-family and a 4-family, and it's a lot of work. How do I possibly get to 770 units? That doesn't sound realistic. And how do someone do something like that?
Well, the first thing is you have to let go of some of the control. Like, I don't do everything. My specialty is kind of the raising capital side of it. I don't get into the trenches. I seldom even look at the properties. I have partners that do that sort of stuff for me. I will help with the financing, getting all the money in place, not just the private financing, but also the lender, working with the institution lending and stuff like that too. So those are my roles. And then once we have the building and maybe optimized it for the first year, really don't have much to do with the buildings after that. We work a lot with managing partners and property managers, and we have renovation teams and all that sort of stuff too. So the biggest thing is not feeling like you got to be the one who does everything.
Mm-hmm. Mm-hmm. Absolutely. I've definitely made that mistake as a business owner of trying to just have too much control, or just trying to do everything to save a buck as well, which kind of ends up costing you more money a lot of times.
Yeah.
And it's so funny. People might hear, well, oh, you don't go out to the property, or you don't get on a plane. And really, you want to hire professionals for a lot of these things, right? I mean, I've seen home inspection reports on the apartment buildings we buy, and I'm not capable of creating one of those reports.
No, me neither. I know how to read them really good, but I'm not going to create them.
Right. I mean, I get halfway through and I start to glaze over. They're long. There's a lot of information. You have to kind of pick out what's of value, what's just a normal rigmarole of depreciation on a building. But that it's important to have those professionals in place to give you those reports. And then, we kind of act a little bit as a gatekeeper in a sense, and just reviewing everything and deciding, what's important, what we need to do further due diligence on. So you kind of feel like that sometimes, in a sense.
Yeah. And I see where a lot of people, when they're attempting to scale, where they get stuck too, because they feel like they have to do that all themselves. And it comes naturally. You buy your own house, you may walk through with the inspector. If you get an inspection, then the next property is a rental. Well, it's the same sort of thing. But with multifamily, like we like we deal with, those reports are mandatory for your lender. They don't even care if you've walked through the building. They want to know the building condition report is done by a professional, that the environmental is done by a professional, and not something that you said anyway. They're not going to give you any credit for it anyway. So you got to hire the professionals, use them for their knowledge.
Oh yeah, absolutely. Absolutely. And, it's also when you get local professionals, they know a lot more. If you're buying in an area, maybe that you're not familiar with buying in, or just a new market, it's working with local professionals can be priceless.
Yes, absolutely. Got to build your boots on the ground wherever you happen to be investing. Yeah.
Yeah, absolutely. And so that's a good strategy. So what is your investment strategy as far as the types of real estate you focus on owning and purchasing?
Well, we've kind of done everything. There's sometimes that it just makes sense to buy a turnkey property where you just walk in, take over, and you start managing it from day one. You got cash flow from day one, that sort of thing. But our biggest home runs have actually been when we've done the BRRRR strategy, where we've went in and, maybe taken a property that's got some vacancy, has been underperforming, and needs some updating and renovations to bring it up to even current market rents. And because I find a lot of times what happens is landlords get tired, after they've been at it for a while. It's like, I don't want to deal with that. Don't want to deal with that. And then pretty soon their building gets run down. And that gives you some really good opportunities to buy. The ones we just bought in Memphis, that was exactly what happened. Like, they had hired property management, expected that property management would look after everything, but they don't. We got to oversee all that, right? Yeah. And then got themselves in a bit of a pickle with lots of vacancy and hadn't really kept up the, all the renovations and stuff like that. So that's how you get some really good deals sometimes. So those are our favorite.
Oh yeah, absolutely. Value add properties. Seth and I, we do the same thing. We look for both. We like those turnkey properties. We bought a 25 unit last quarter, or actually last year, the end of last quarter of last year. And that was really a nice turnkey property that's producing better than targeted. And those are nice assets to own. However, we are also buying now a 27 unit. We like these types of buildings. We bought plenty of them and putting another $330,000 into it. Rents 30% below market value. It's 2 blocks to the New Jersey Transit train station that gets you into Manhattan in 45 minutes. It's a gold mine location, but the owner just kind of forgot to manage the building properly for the last 5 or 10 years. And so, those diamonds in the rough, much harder to find these days than they were a few years ago. But when we do, we try to strike on them pretty quickly.
Well, in some owners, one of my students just recently, she bought it was a 9-unit building, and 7 of the 9 units were vacant. And after talking to the son, she found out that the parents had actually owned the building probably way longer than they should have. They were in a nursing home. So it got left to the son to look after. He had no interest whatsoever, except for how fast can I get rid of this? And she found out after the fact that they had actually developed dementia. So their last few rent checks, they had not even deposited them. And, and so you cannot manage a building like that. And so it was worth way less than it should have been had they maybe sold it 5 or 10 years prior to ending up in this nursing home. But the son just wasn't interested. He was in Vancouver. These guys were in Toronto, and it just got left too long. But she ended up with an amazing opportunity, bought it for 1.1, put in 200,000, refinanced it at 1.85, and increased the rents. The old owners had the average rent around 800, the 2 that were left, and increased the rents to $1,850 a month. So she cash flows at one little 9-unit property, $5,500 a month.
Wow.
With all of my own money out of it. Yeah. So it still happened. That was maybe, I think she financed it in April. So it just happened. Yeah.
That's great. Yeah. The buy, renovate, refinance strategy is just amazing. And, I just feel like it's gotten harder and harder as the market gets higher and higher. Are you seeing that in the Canadian markets you work in?
In certain areas, yes. Like we see a lot of money that people have made just even in their own personal homes in Toronto and Vancouver areas, especially.
Mhm.
And there's nothing that they can buy that would cash flow make them any money. So they're starting to look outside their cities and they're maybe looking more northern areas or different parts of Canada to look for actual cash flowing properties. So yeah, it's in one sense, it's their homes have done really well. They've got all this equity built up, but they've got to make smarter decisions and get out of their area and start looking at something. And with the stuff that we've bought in the US, you just have to dig. You have to find, you have to look. At the last bunch we bought, 21,600 a door, and then probably put in about 16,000 a door. But after repair value, will be around 60. And you can still find them, but you got to be looking. You mentioned before about people doing too much of the work on their own. That's the other thing that I noticed when we took our training. We took it through the Robert Kiyosaki Group, and we had 18. In 18 months, we had 50 doors, cash flowing 5,000 a month. I think our net worth had increased like 800,000. And people would say to me, Edna, what'd you do? Like, what'd you do so different? We took the same courses. And I said, well, I didn't step over dollars to pick up dimes. I found out most cases what they were doing is property managing themselves to save that $100, doing the maintenance on the weekends to save that $50. Mm-hmm. And then after about four doors, they were totally stuck because they were doing all that little stuff and they didn't even give themselves any mind space to keep looking, keep finding the deals, keep looking. And that was the part that I noticed was what we did different from most people.
Mm-hmm. Yeah. And that's one of the biggest challenges, that building out of that place, right? Because I remember I bought my first 5-family in Newark, New Jersey for $135,000. By the way, just appraised for $675 when we refinanced it. So
yes, that's awesome.
Put about $50,000 in renovations into it. And this was about 2011 or so, 2012. And just really doing everything myself, trying to, and then finally I hired a management company, but they really didn't care all that much about my property and were actually quite disorganized themselves. And so I had a lot of challenges there also along the way. And it took till we got to about 75 doors to really develop our own management company, because we buy local here in North Jersey. So everything's within about an hour of our office. So we're able to manage in-house. But management of real estate, boy, is that probably one of the hardest parts of probably the hardest part of this business is.
Well, we get it. If you're dealing with your property, you're also emotionally involved, whereas a property manager isn't. It's just, it's their job, and they're kind of our liaison. I know at one point, my oldest daughter was our property manager. We did like you guys did. We just did our in-house stuff, but she would bring me some of the challenges, and I would just get mad. Oh, how could that happen? Get them out of there. And finally, I just learned to say, you know what? Just send me the bill. Don't tell me the story that goes with it, because it would just make
That's my attitude at this point too. You can't get emotionally involved. You have to do the best job you can do with property management or managing property management. Of course, I'm not running around knocking on the doors. We have staff in place, but it's constant problem solving, right? And constant setting up systems, checking your systems, trust but verify. Contractors always trying to pull a fast one. Just the last meeting I had was a contractor. We just had to let go because they're constantly trying to trick us into paying them more money. Like my wife and I just had a baby, and we were out of town for 2 weeks, right? And the first thing this contractor did was send us pictures and trying to trick us into giving him payments for jobs he didn't do. And it just really shows your true colors when you step out of town for a couple of weeks,
And the thing is, they're short-term thinkers. That never works long-term, does it?
No, it's a shame. Yeah, we were doing a lot of business, but just one of the challenges of working with service providers and managing properties. And we're developing new holdings in Southern Vermont right now, hotels here. My wife owns a short-term management company, and People's Capital Group is buying the properties up here. And And it's very exciting stuff. And my business partner manages our New Jersey operations, New Jersey buildings. But one of the reasons we moved up here is because it was so hard to find deals in New Jersey. So we're definitely in that boat of moving out of a very congested, competitive market, right? Moving out to the suburb or the rural market. So you see people doing that in your courses and just fellow investors as well?
Yeah, absolutely. Because it doesn't always make sense. I had someone reach out to me the other day and she said, Edna, my 12-unit building has been valued at $2.5 million, but I can't even refinance it. I can't even get $1.5 million on it. I think she had a 600,000 mortgage. They might have moved it up to $1 million. But I said, that's because there's no cash flow. There's nothing to give the real value to the building, right?
Yeah, exactly. And you never want to buy for negative cash flow. At least a personal rule of mine is.
Me too.
Right. I mean, these people buying in Manhattan for like negative cap rates just doesn't make sense to me. And I think a lot of them lost their shirt in the last few years as well. And Class A real estate.
Yeah, that's not a long-term plan. I've seen people, like that one student of mine that bought the 9-unit, that 7 were vacant. But it was a very short term, like within 6 months, like she was turning this property, added a tenant, turned this one, added a tenant. So it wasn't a long-term project. There was a plan in place to make sure it was going to cash flow. And it did. She even had an after repair value evaluation based on rent and the renovations. And so she knew going in what needed to happen. And then that's exactly what did happen.
Yep. You got to know your numbers. I was just talking to an investor the other day and, they didn't understand that when you go to refinance the property, it has to make a certain cash flow to get that mortgage, right?
To get financing, yes.
Yeah, buy, renovate, and just like get it rented out as quickly as possible and then refinance. And no, you really actually need to renovate the right way, lease up the right way, get top dollar, take your time. It's probably not going to be done in a year if it's a larger size building. In fact, more like 2.5 years for any decent sized building and is a good timeline to really reposition it properly. And so, we're seeing that, the rents do remain strong right now and our markets are strong here in North Jersey. Now you're investing primarily in southern markets. Is that what I understand?
Well, the last 2 purchases we made were in Memphis, Tennessee, and we're looking actually in Jacksonville, Florida right now, and Memphis. We're still focusing on Memphis. But we really look any place where it's a landlord friendly state, first of all, and then also where the numbers work, and not just the numbers, but that there's good potential for the area to stay long-term. We're also not scared of smaller markets. Like some people like to stick with the bigger markets. We found some of our best cash flowing properties in some smaller areas.
Yep, absolutely. Absolutely. Well, if it's on the headline of CNBC, then it's too late, in my opinion.
Yeah, it's so true. So true. Yeah.
Right. You really want the secondary markets. I'm a big fan of secondary markets. We don't invest in Manhattan or the boroughs of Manhattan. We do smaller cities that play off that metropolitan market here. And, so we see a lot of value there. But, the South is great for cash flow. It's harder in North Jersey and things like that. The cash flow, we really buy for equity growth over time with the buy, renovate, refinance strategy. But, the hotels are good for cash flow and the apartment buildings do cash flow over time. That's always a nice thing to see.
Yeah.
And, so now you're also on the coaching and training side. Just talk to me a little bit about how you work with new real estate investors, people looking to learn more.
Well, generally, people come to me when they've maybe bought a few houses and they already know that they definitely want to scale their real estate business. And so I show them how to get into multifamily. We use a lot of investor capital to do that. And mostly I help them buy their first 2-3 buildings, because once I find that once they understand the system I've set up, then they can just rinse and repeat and do it again and again in whatever market they choose to, because the way that I set up the system is you can plug and play it anywhere. You got to start with your power team wherever you are. And so there's a system to getting those right in place. You got to have your lenders in place, and then you got to have your property managers, all that kind of stuff. So it's really building that power team and understanding where to buy, why you're buying, how to analyze a property, how to find the right deals and stuff like that. And then, so there's a training component. There's a networking component, because I find that sometimes I've got people in my group who've got the money but can't find the deal. and vice versa. So they partner up. And then the coaching comes one-on-one when they're actually working on a live deal, because the first one or two are the hardest. And then I make myself available for later on. If once they get established, they're buying their first 100 unit. Well, there's just a few different things you got to think about. Some of it just a mindset. When we add one more zero, what does that mean? And so brainstorming and helping people just through that challenges of just the whole growth part that comes with becoming a multi-millionaire real estate investor.
Yeah, absolutely. That's very interesting. So how can people connect with you and learn more about your program there?
You see my name behind my head. That's my website, ednakeep.com. Okay. And my email address is also edna@ednakeep.com. And what I recommend to people, if they want to reach out to me, I have a 25-minute webinar that I share with people. It kind of gives them our background, so I get tell my story, and then book a strategy call with me. It's something that interests you. You want to learn how to do this yourself, because I know you're dealing with a lot of people who just want to be passive investors and invest with you. But for people that say, hey, I want to be like you, I want to be like the Aarons of the world. Yeah, that's what I do. Then I teach people how they can do that themselves. And Aaron, I find that some people, they think they want to do it. Then they realize how much work it is. And they go, no, I think I'd rather just be the passive investor.
I was just going to say that, actually. You took the words out of my mouth. I have the conversation all the time with people, and I tell them, I'm like, okay, here's what I do day in and day out, and here's the steps you need to take. Generally, by the end of the phone call, they're like, so what am I going to make if I just invest with you again? I'm like, okay.
There's just a learning curve, with any of that kind of stuff that you take on your own. But still, there's a bunch of us crazy ones that want to do that, right? We want to do it on our own, and we want to be the one in charge and the one running things. And that's okay too. There's room for everybody.
As they say, heavy is the head that wears the crown, right? So
exactly.
I just had a newborn baby, as I told you. Everyone's like, oh, you're going to have sleepless nights. I'm like, buddy, I've been running a real estate syndicate for 10 years. I know sleepless nights. I'm up anyway at 3 a.m. with them. Now we can hang out. Now I have a friend to hang out with at least, right?
Exactly.
No, just in the beginning, just getting started, right? Now you get up to the first million is the hardest, right?
The first one's the hardest. And then, like I said, once you get a system in place, then it's rinse and repeat. That doesn't mean it's passive though, because, you don't want to be one of those owners that ends up selling us a property because you didn't look after things and you think the property manager is going to do everything, because they're not. You got to be on top, like you just said, you got to be on top of your renovation guys. You got to be on top of your property managers. So it's never really passive on our side of the fence.
Oh, of course not. No. Being the operator is far from passive. Quite the opposite.
Yeah.
That's interesting. No, and it's been great speaking with you. I've definitely learned a lot about your side of the business here and how you help real estate investors. And hopefully our guests were able to learn a lot, or our listeners were able to learn a lot as well. Before we go, what is just a lesson you've learned, the biggest lesson you've learned in real estate that you can advise other real estate investors on?
You know what? Educate yourself, because there's so many things that can go wrong. I've seen so many people buy because they have the money, like the deals we just bought. They had the money. It was a group of doctors. They had the money. They buy this big deal, but they don't know what to do with it after. So you really got to know your stuff, not just because you got the money to throw at it, because you don't want to come out, on the losing end of something like that. So you have to get educated. And the other thing is get around like-minded people. You know what? And this happened to one of my students just recently. He was telling me, I was having a conversation with one of my fellow workers, and he said to me, oh, why are you getting into multifamily? And what do you mean using other people's money? Why don't you just use your own money and just buy a house? And I said, okay, well, I said, does he own real estate? And he said, no. And I said, well, what's your thoughts on that? What are you thinking? And he said, no, I want to own real estate. And I said, well, then you got to take your advice from people who own real estate, not from people who don't. And he said, yeah, come to think of it, that guy doesn't even have a furnace in his house. And I go, and you're wanting to take advice from him? Like, hello. And he goes, well, I think he's just being kind. I go, he's not being kind. He's being an ass. He does not know. You got to deal with people who know and people who've done it. Mm-hmm. Otherwise, it's all theory.
Mm-hmm. Absolutely. Oh my gosh. I got so many stories of people that take financial advice from broke people. Just the biggest mistakes one can make. Right?
Oh,
makes sense to me. But that's what happens sometimes. And it's our job to try to stop people from doing that and show them really how to build wealth. So hopefully we can do that. And that's always the goal. So thank you, Edna, for your time. And again, our listeners, I'm Aaron Fragnito with the Passive Cash Flow Podcast here. Thanks for listening. Check out our other 60 plus episodes, and you can learn more at peoplescapitalgroup.com. I'm co-owner of People's Capital Group, where Seth Martinez and our management company, we buy, own, reposition, and refinance apartment buildings in New Jersey and hotels in Southern Vermont. So check us out at peoplescapitalgroup.com, and you can connect with Edna at ednakeep.com as well. And we'll put her link there in the show notes so you can connect with Edna. Thanks a lot for coming on.
Thanks so much for having me, Aaron. It was my pleasure.
Have a good one.